Hello, and welcome to the next episode of The Compass. My name is Macpherson. I'm Executive Chairman of Olive Resource Capital. And with me, as always, is Sam Pelaez, CEO, President, and CIO of Olive. First, I have to apologize. It's been about a month since we recorded an episode. Was just looking back at the dates to check some numbers. A lot's happened in the market since then, and so I think that's kind of where we're going to start. And then we'll focus on kind of where we are in markets, what we're doing with the portfolio, and how we're kind of positioning ourselves, and then I guess round it out with some what we describe as tax loss buying. So tax loss selling is one thing, is something that comes in the market, but it creates opportunities. And so describe a little bit what it is, and then what we look for, and then kind of maybe talk a couple names that get in there. Sam, before we hopped on here, I was looking at the numbers, because from a month ago, it seems like the sentiment has changed a lot, like that it's gotten a lot more negative since the last time we spoke, which is, like I said, it's a month ago. We were talking about silver, and usually when you start talking about silver, so you're in a toppy part of the market. The world is pretty good. And I just looked back at it because I wanted to know, where the gold price was, where the silver price was, kind of where things were. And the gold price was about just over 2,600. We're just below 2,600 right now, so it's effectively flat or unchanged, $20 move. Silver was right around 30.50. Right now it's around 30.70. So again, flat or unchanged. Copper's off about 5%. Okay, that's a little less economically positive. So okay, that doesn't account for a massive sentiment change. Now, the intervening period here was a little bit interesting. Obviously, just say the last time we recorded was early October, and so, or mid-October. So now mid-November, a month later, the U.S. election happened between here and there.
I think it's also part of the reason we haven't recorded in a while. Is we were in this sort of like holding pattern, waiting for the election, because whatever happened in that second half of October, first week in November, was sort of irrelevant in the face of this mega macro event that was going to take place, and it did take place. You could start see the markets were sort of already kind of informed, and I'm not saying in an illicit way, just by the polls and where the money flows were moving, that it was more likely for Trump to win, because the rebound in the US dollar started well before the November 6th, the first week in November election. And I think that's the key thing that has changed over the last 45 days is the behavior of the US dollar. It set a really interesting low around 105, 100.5 or 101, and now it's trading somewhere at 106. That 5% move in the dollar is quite significant. Like 1% move in the dollar typically means multiple percentage point moves in everything else. And just to preface, I guess, what we're going to talk about, but and what you just said, the corresponding moves that we've seen in the commodities that should have been multiple percentage points lower, we have actually not really seen that much of it. I'm actually quite pleased to see that commodities have been holding it reasonably well in the face of that kind of flock of money to the U.S. dollar and essentially to the U.S. economy.
Yeah, well, I think you mentioned that the Trump outcome was sort of, well, the money was flowing as if the Trump outcome was there. I think the thing that wasn't there, and I think that the intervening period between mid-October and mid-November is that the big thing there was actually gold and silver prices peaked in there. While they are the same as they were, there's been a bit of a round trip, right? And silver was almost 10% higher. Tops out of 10% higher, $33, $34. And so I think what wasn't anticipated was the red wave, right? In the sense that, you're going to have, Trump and an uncontested election, right? Trump won in a landslide. He won popular vote. He won all the states. He won everywhere. That looks like they're going to control the House and the Senate. That wasn't anticipated. I think that I think there was a lot of a view that there was going to be this contested election out there, and then that contested election would then create some uncertainty and create vol. And I think that came out very quickly after the election, and then came into basically hit us at the same time that you get a seasonally weak period in precious metals, which is mid to late November. And then so all of a sudden you get this rollover in price, but you got to roll over in sentiment as well. For everything that's happened, and oddly enough, I also checked a couple of the indices, like, well, what are the equities doing relatively speaking, right? And if you look at it, from that mid-October to mid-November, other than GDX, SIL basically flat, the GDXJ basically flat, down a couple points. The GDX is down like 6%, but is what it is. What I would say though is that I'm not going to mention the SILJ because that's an episode, ETF episode in and of itself. Because they just did a massive, some people have probably heard some chatter about it, but the SILJ had this massive rebalancing. They've destroyed some stocks in the process. Creates opportunity in of itself if you're aware of those things. But I think in the future episode, there's a future episode on ETFs and how they're constructed and what the impact is on stocks. But so equities are
So I just wanted to compliment what I was saying earlier. Like, the commodities haven't done too poorly. Actually, they have done fairly well in the context of the rising US dollar. What hasn't done that well is the equities, the associated equities in general. Within that, there's different brackets, as we know, the different risk levels, and they have performed differently. But we put it out on our monthly NAV that this October was the third month in a row where the resource equities have underperformed the commodities. So I think what we're seeing is resilience in the commodities, weakness in the stocks. That's not unusual when you're going into the October-November period. It seems to have happened a little bit sooner this year. And that's part of the reason we're making this episode is the big catalyst is out of the way. There's still obviously some discussion, quite a bit of discussion as to how this Trump presidency is gonna take place and what's gonna happen to the U.S. dollar and deficit spending and government expenditures, etc. But what we've seen to date is that the commodities, although they've given back some, they're still holding pretty strong. Maybe I'll caveat that crude is actually not in that bracket. That bracket is actually taking quite a big swing. But
drill, baby, drill.
Drill, baby, drill. But the equities have taken on the chin. Some of them, especially those that are really exposed to tax loss selling. So I think the message from this episode is big catalyst is out of the way. Commodities are holding up, and there are some names out there, actually quite a few, that are presenting some really interesting entry points. The kind of entry points that we hadn't seen probably since at least, I would say, September last year, or even better, October 2022. The stocks are, in many cases, not the same place where they were in October 2022, which was a great entry period. But relative to where the commodities are, I think some of them have opened that opportunity to participate at these levels.
Yeah, just maybe before we jump into sort of tax loss selling, tax loss buying, and then kind of what we're looking for in names. You touched it briefly, what a Trump presidency looks like, and with the Republican House, and what that means economically. And I think that there's a few things that kind of you can delve into on that. But I guess, one of the, for a lot of gold people, question I would get going in the election is, what do you think gold's going to do with the election? If Trump wins, if Harris wins, whatever. And, my comment was, and I still think it holds, is that, but it's worth discussing here, is that probably around the election, there was going to be a lot of vol. And we saw that, right? We got a significant pullback in those things, but over the medium term that, kind of impact neutral. Both candidates were promoting significant deficit spending. Trump's talking about tax cuts, significant tax cuts, subsidies, etc. So it would appear that the deficit spending is going to continue in the U.S.
Yes.
Successfully that over the last, I guess, 4 administrations, the deficit's just expanded, right? There hasn't been a period where it actually contracted. And so I think we're going to continue to get deficit expansion. And then I guess as we get through that period, those periods of deficit, and I guess that's the thesis. And if you look at the gold price post-COVID, it actually really has moved more with deficits than it has, say, the U.S. dollar, which has been the historical sort of trend. I guess what else do you maybe see from a Trump presidency or with the Republican-controlled?
I'm actually optimistic about this next 4 years for the U.S. Having said that, because I think a lot of the changes that are going to be implemented are certainly pro. I'm not going to say pro business, but like pro economic growth, with the exception of the tariffs. But that's a different subject that we'll touch on later. But lowering taxes, removing red tape. Trump did do some of that in his first. That's probably the most prolific part of his first presidency, and I think he's just going to bank on that and more aggressively for this presidency. That's going to be very good for the U.S. economy, I think, in general. But when it comes to deficits, he's starting off such a low base already. His program envisions a lot of spending, and initially, if you lower taxes, but also the whole efficiency program that Elon Musk and Ramaswamy, they're going to be running, it takes a key proposition of that is just buying people out of their contracts in government agencies, which means 1 to 2 years of salary that you're going to be paying next year when you lay them off. So at least 2025, I think the deficit is going to be scandalous, actually. But when you see 2026, 27, maybe, and that's a part where I'm not sure how the market is going to take it with commodities is, are we looking at 2027, 2028 after this one-off kind of like big event and adjustment? Or are we looking at 2025 and 2026 where perhaps the deficit is going to be quite shocking in a sense? I'm not sure how the market is going to read that through yet. So I'm not sure exactly how optimistic to be relative to commodities. I wish I had all the answers, but on this one, I'm just not sure.
Yeah. There's a question on how the what is now effectively a meme government agency, the Doja government agency, is how effective it's going to be early on, and if it is the take the medicine in 2025 to 2026, 27, then who knows? Because there might also not be a belief that it can happen. Also, you're assuming that there's no economic events that require government intervention and spending that would to offset those changes. So there's a lot of moving parts on that aspect. I think maybe this is the other piece of it. I mean, the pieces of Trump's presidency that, by the way, weren't actually removed in the Biden years, which are the tariffs, right? Effectively trying it's basically an effort to level the playing field for American businesses, right? That's what the purpose of that's what the goal of those tariffs are. And he's basically said he's going to tariff everything. And so there's a real question what the impact that's going to have.
Well, there's two aspects. One is how much money they're going to bring in to the till, because that's effectively what he's going to use to subsidize the tax cuts to Americans and to American businesses. The second part is how destructive of certain economies or certain sectors of the economy they can be. The true fact is that China can make a car 60% cheaper than the U.S. can of a similar quality. So what are you going to level off, like 150% tariffs? Like I think it's gonna get to a point where it's somewhat impractical. But
well, and even Musk on this is on the Joe Rogan podcast. You talk about tariffs, right? And he's like the thing that the electric vehicle industry is an example, right? Everything flows through China. Materials are processed there. Batteries are assembled there. There isn't a piece of the graphite chain. The graphite piece of the battery supply chain is not out. There's not one battery that is not touched by China right now. So tariffs and things like the IRA and subsidy, like those are all going to be, kind of challenging things to implement because you're you're basically going to drive up the cost at home. And then there's the whole I guess there's an argument to say that there's potential for tariffs to be inflationary. Now, they're not inflationary in the same way, say, like energy prices are or anything like that, because they're, your car goes up in price, or your consumer items go up in price as opposed to your staples, right? Most of the staples are manufactured in the U.S. and energy has a much, much larger impact on that than sort of tariffs in China.
It's interesting because tariffs are typically kind of like a symptom of a declining economy or a early stage economy, which the U.S. certainly isn't, right? And countries with tariffs typically don't work very well. Like Argentina has always been a tariff-heavy country, which, funny enough, just I think it was on Friday or over the weekend, President Milei actually just eliminated the big swath of tariffs on consumer good imports, and I think that's a sign of a healthy economy, right? When you can afford to buy products because your trade balance is it's reasonably well balanced, I guess is the word. I'm not entirely sure that tariffs is the answer, but I'm sure they have macroeconomy experts looking at it. But I guess what I want to say is we don't know how this is going to play out, but we do know how some things are likely to play out, and that's probably one of the angles that where we're looking at this is the DOGE Department of Government Efficiency. One of the things that it's looking at is eliminating government agencies. There are something between 400 and 500 government agencies. Nobody seems to know exactly how many, which kind of proves the point. And my guess, and this is a guess, is that, on January 20th, an executive order comes out and probably half the agencies, if not more, are completely disbanded right away. Severance packages, reassigning the priorities to other agencies, etc. And in my mind, that could be very positive for our industry. Because instead of dealing with 4 or 5 different regulators, maybe you go down to dealing with 1 or maybe 2, or maybe some projects are completely just state level projects, as opposed to having to go through Washington, which is part of that has been done in Canada quite successfully, right? Is keeping the permitting to a provincial level. In some instances, there could be some of that. I actually think there will be some of that. We don't know how it's going to look like, but yeah. Sorry, go ahead.
Yeah, no, I was just going to say permitting. I mean, I know a little bit about resource permitting in the U.S. And kind of have the scars to go with it. I 100% agree, right? It depends. So, right now, if you're permitting a project in the U.S., it depends what type of land you're on, right? State, federal, private, right? So there's different permitting agencies that deal with based on that. Generally speaking, most projects have a combination, which is even worse, right? So you have to deal with all of them.
Right.
On top of that, it depends on where you are, right? So if you're on Forest Service ground and you are permitting a mining project in North Carolina, like if you remember back to the Remarkably days for Hale, which is now Oceana, that was United States, the Army Corps of Engineers who managed that one. If you're in other agencies, there's different groups. If you're in other forests in different states, it's different groups who manage that permitting process. So it's very fragmented. It's definitely something that's good. And I think places where executive order or executive influence have been used to slow down projects. I mean, the obvious one is Trilogy, the road for Trilogy. That was a road that was approved under a Trump administration, clawed back under a Biden administration. I think that projects like Resolution, which is the big BHP Rio joint venture underground copper project in Arizona, that's going to go. I think you're going to see some of the significant resource development projects, especially ones where there's national self-interest on the critical mineral side, which includes copper now, are going to move ahead. And I think that that's an important aspect, as we sort of, to bring this conversation full circle, as we look at tax loss buying, this fundamental change that has now happened in Washington, right, is altering, how you would view U.S. projects and the permitting and red tape required to complete U.S. projects. And I think that is something that, as we look at, okay, what are the names that we like, and what are the names where we're gonna step in and want to be a little bit more aggressive going through this this fall season, this tax loss selling season. There's an opportunity. So
yeah, and just to complete the thought, like, Trump has been vocally kind of against the EPA in the past, and I think he could take how do you say in English, like the hammer approach, where you just like break everything and then start building it back up slowly, in a way that works. I think there's a distinct possibility that happens with environmental permitting in the U.S.
Well, I mean, Trump actually knows how hard these things are, right? Like, Trump builds things for a living, right? He built golf courses, he built buildings. Like, that's his thing. He knows how complex difficult it is to actually do something like this, right? To build things. And so I think that, in his own self-interest, right, which we can all be somewhat certain that Trump has some of that at heart, in his own self-interest, he'll actually look at that and go, okay, yeah, after I'm done being president, I'm going back to build things. So I want to streamline that process. It's got to be easier to build things. And maybe it is back to everything gets pushed down to the state level. And I think that would be good for resources, because I think if you pushed everything down to the state level, then you actually have the people who are impacted making decisions on whether it should move ahead or not.
We've had this in other jurisdictions where the project gets sent back to the state level, with the exception of projects that are deemed to be of strategic interest to the nation, which are then expedited through a federal process or national process in the non-federal countries. I think that may be what then ends up, some variation of that is what we may end up getting, which obviously will be much welcome in our industry.
Well, and there are precedents for that in the states already. There are some states that have their own, that even on federal ground, they control the permitting process. So we'll see. I think it's a question, but I think the theme of it will be easier. Next step, before we get to names, we'll talk about we're coming into tax loss selling season, and for those of us that are in Canada, kind of know what that means. But I guess it's probably worth describing what happens to those who are potentially on the outside. So the fiscal tax year end in Canada is December 31st. For capital gains, so outside your registered accounts, you can crystallize losses, right? So by selling those stocks at a loss, you crystallize that loss. Usually you use that to offset capital gains or other income, right? So if you've got a regular job or a decent job, obviously if you're investing in junior mining stocks, I hope you have a decent job because of the risk profile. But if you're investing in junior mining stocks and you've got a significant loss on a name, you can sell that name and crystallize a tax loss, a capital gains loss, which then you can use to offset your income. So there's a benefit to doing it. Now, you have to be one of the rules of this is that you have to be out of the name for 30 days. So if you just sell the name and then buy it back again the next day or a few weeks later, it's not considered doing it. You have to be out of it for 30 days.
Taxable disposition.
Yeah. Now, the taxable dispositions are the government. In Canada, the taxable dispositions work in the government's favor, right? If it's a taxable disposition if it's a disposition with a gain, it's immediately taxable. If it's a loss, you have to not restart the position. So, as an example, you can't sell, a few days before a financing closes, and then buy back in a financing and count that as a taxable disposition and collect that loss. You have to be out of the name for sort of 30 days is generally the rule. So what ends up inevitably what happens is that you get in November and December, and it feels like it starts earlier and earlier every year, but in November and December, you get names will sell off just for this reason. Typically, you look for names that are well off the 52-week high, well off sort of I used to run a thing of the volume weighted average trading price, right? So where the stock traded most of the year, where the stock traded most of the volume for the year.
Yep.
In a lot of small names, those numbers can actually be pretty high because maybe they traded a lot of volume on some good drill results and then I pulled back. And if someone who entered that position there it has an opportunity to exit. Or then you look at, and the other one is where it is relative to sort of the last couple of years high where people would have entered. And the inevitable. So if you take all those things into context, inevitably what happens is people will sell. And when the market has been weaker than it is now, even those small sellers make a huge impact. And so you get these sell down and it creates opportunity. We are not, fortunately or unfortunately for all of, we're not taxable at this moment. So we're not looking to crystallize losses where we are. But what we are looking for is buying opportunities because you get these low volume moves down. Oh, I guess, sorry, just before I finish that, because of that 30-day lag, what happens is you say, okay, let's see, there's a name you like. You decide that on December 15th, okay, I'm going to sell that name, crystallize my tax loss, reduce my taxable tax I have to pay for 2024. But you might still like the name, and so inevitably in January you buy it back, or similar time frame. What ends up happening is with a lot of these names is that you get a sell off in December, and you get a hard rally in January. We saw a lot of that last year. I think the poster child in our portfolio last year was Troilus. They did the financing late in the year. Stock was weak right through till about mid-December, and then took off, almost doubled over the course of a very short period of time. Oddly enough, a name that we're expecting to do the same this year. So that creates an opportunity, is that all of a sudden these late November, December trading levels create very attractive entry points, especially if it seems like a stock is down. So some of those companies that fell out of the SILJ, in that trading, that's going to create some attractive entry points for people. And I think generally speaking, the balance of tax loss selling is going to create that. Now flip that lens and look at, okay, we like US names because we think there's an opportunity there. We have a theme generally, as we've talked about here, we like developers who are going to potentially be built this cycle as M&A targets and good projects. So that's another thing, kind of check as names we're looking at. There are probably a few names that we would consider to be sort of new entry points, potential new entry points. Probably not going to talk about those here till we have a position in them, but we'll talk about some of the names we've talked about here previously. So why we think they might be good tax loss buying candidates here as we look. Sam, I'll let you start it off if you'd like.
I was just going to preface what I'm going to say. The names are not all in the U.S., but thinking about what we just discussed in the U.S. and permanently going to the state level, potentially, I think some
at the very
states,
least getting easier.
Right, but some states that have a history of mining should be much more attractive now than they were 6 weeks ago. So Alaska, Arizona, Nevada, the traditional mining states, it'll kind of be hard to, if there's this regulatory change, for you not to get permit approvals, barring some serious issues which do happen with some mine sites. But I think those traditional mining states in the U.S., projects in those jurisdictions should do very well. So I guess for us, and one that's on private ground, which is already better, is Arizona Sonoran. They announced their PEA 3 months ago, maybe longer, sometime over the summer. We quite like the scale of the project, even though it's a small site. We do like the scale that the project is getting. Very well located, already a disturbed site. There was a mine there before. It's in Arizona. It's a copper project. For us, ticks all the boxes in terms of quality, of the project, quality of the management, and believe it or not, and actually let me pull up my screen. They did a capital raise post the PEA. I want to say 165 a share, and today, well, as we're recording, you could be picking it up for 129. So 20 to 25% lower than the placement. In my view, this is, I can't say purely tax loss selling, but it's certainly a company that's subject to tax loss selling in this particular period.
Sorry, just minor correction. That financing was at 145 for Arizona Stock.
That's at 145. But I think the stock was 165 when they announced it, or something along those lines, or hit 165. And the high of the year is the high of the year was in January, but post January, towards the end of August, it traded at 172. So this one is certainly being affected by tax loss selling. This is a name that we obviously like, and that we've been adding to our position all throughout the year, but in particular after the PEA.
Yeah, I think that's a great one. Checks a lot of those boxes. Checks the U.S. A name that we actually added to, and I don't know if it's going to be as much of a tax loss. Tax loss selling tends, and then maybe I'll just say this, tends to affect smaller names more. Larger names tend to be more liquid and don't have that same impact of the seller. But one we added to after the election, we lightened up ahead of the election when things were running, and we added to after the election was Anglo Ashanti, or Anglo Gold. That is a name that we really like. Obviously, their big development project is in Beanie. Actually, just as an aside, a couple weeks ago, I actually just drove through there.
So Beanie, Nevada, right?
Beanie, Nevada, yeah.
For those of us that are not
regularly
with every town and village in Nevada.
Yeah, who aren't regularly driving through the raging metropolis of Beanie. Really good, like, candy store gas station in Beanie if you're, planning your trips and looking to stop on 95. But so there's one where the key development project is, mostly on federal land there. It's got permits for part of it, but the big part of the project they'll need permits for. So I think there's another one that benefits if they can get themselves in the permitting process. And if you see any weakness there, we obviously saw some weakness on the gold on the gold's move down after the election peak.
It's a U.S. company now as well. They relocated to the U.S.
They relocated to the U.S.
Year, I think.
Yep.
So the growth project right now, the key growth project in the U.S., very permeable jurisdiction in Nevada. And I guess it's now the second largest gold miner in the U.S. after Newmont, right?
It would be, yep.
And I mean, like U.S. domiciled headquarters.
U.S. domiciled, yeah. I think I'm probably the largest miner in the U.S. Would still be Nevada Gold Mines from a gold perspective, which is the joint venture between Barrick and Newmont.
But it's going to start falling more and more into the orbit of U.S. buyers as well. So this company peaked at around 32. Last I checked, it's running at 24. So again, great entry level. And once again, in this clip, we don't give investment advice. This is just what we're doing with our corporate account, the two of us. But yeah, this is a name we certainly like as well.
Yeah, I guess that's kind of the point. You don't need to be buying. We don't need to buy way down cap to get attractive entry opportunity this time of year. One we mentioned briefly here. We think it certainly lines up as a tax loss selling candidate. Is Troilus, much like it did last year. Got the financing out of the way, got itself set up. I think that there's an opportunity for the stock to move higher. I had some good news on the financing front, expecting more from that perspective as far as funding sort of that $1 billion build. So really think Troilus is attractive here. I think that it's certainly one that has a tax loss entry potential, particularly given the structure of the financing. Justin hasn't issued warrants that often, and so except for last year. And so I think that those warrants sometimes bring in a certain type of buyer, which are prone to sell very quickly. And so I think we're seeing some of that, actually seeing some of that punishment here, or some of that reflected in the share price.
I think it's just a reminder on Troilus. It's over 13 million ounces near Chibougamau in Quebec. So fantastic jurisdiction. Also a formerly disturbed site. There was a mine there before. Copper with some gold. Gold with some copper credits. And they just recently announced a letter of intention from a German government agency that effectively backstops smelters that they're trying to buy or secure feed. In this case, it's rubies. So they're kind of already starting to demonstrate the financiability of the project. Yet, I think next year we're going to see, we're very likely to see an M&A wave, and I'd be frankly surprised if this doesn't make part of that M&A wave.
Yeah, I think that's the other aspect. I mean, these mid tiers and seniors continue to add material amounts of cash. Another name that might be a little bit out of left field, but is one that we'll keep looking at. That actually just started trading in our portfolio is Silver 47. Interestingly, it's a name that had been private for a very long time, and so this is a slightly different dynamic than tax loss selling, but. What happens when a name is private for an extended period of time is they're looking to build assets. And for a variety of reasons, Silver 47 was not entirely in their control. And so I think that one of the things that sometimes happens when these companies initially come public is that there's a lot of selling. People who have been stuck in the private entity try and get out, kind of can look like tax loss selling and will look like tax loss selling because of the time of year. So I think that that's one that, on weakness, we continue to look at and see how it trades. We're recording this November 18th at 9 a.m. And so, interestingly, just had some good drill results out this morning. So we'll see what transpires.
Yeah, maybe give the audience like a 30-second quick summary of what Silver 47 is.
Yeah, so Silver 47 is a silver explorer in Alaska. So again, fits that U.S. theme that we were talking about. Has about 100 million ounces of silver equivalent in an existing resource. That resource was cut down to NI 43-0101. There was actually a larger JORC resource when they first acquired the project as a private company. And so we would expect as they start to drill and they start to explore, they're going to get that those ounces aren't gone. They just need to be, the data needs to be a little bit tighter to bring it in. And so that resource, I think, has lots of room to expand on a short-term basis, and there are a number of step-out targets. I would call it it's a precious metal rich-ish VMS. I wouldn't describe it as something like a LaRonde. It's not quite as gold heavy or something like a LaRonde, but it certainly definitely has a lot of economics associated with the precious metals.
Perfect. We have other names in the portfolio, but that we're taking advantage of tax loss selling. I don't know if we need to mention all of them, or not with this level of detail. We've talked about Bravo, the PGM / now potentially copper explorer in Brazil. That's also being subject to this one. And
well, importantly, it's a very illiquid name as well. And so a small seller there trying to capture some tax losses could create a very attractive entry point very quickly.
They're following up on their copper exploration targets. So we're waiting for some equipment to the borehole EM surveys. Brazil, because of tariffs, is a difficult place to get equipment into the country. So typically what you do is you just wait for equipment in country to become available rather than paying the import duties to bring new equipment. So that impedes business somewhat. But that was the delay following up with the copper targets. We expect to see results on that in the first quarter of next year. And so far they've hit in every hole. So we're pretty excited about that exploration program on top of the continuous expansion of the PGM deposit. I think
that's there are other names we've mentioned. I mean, obviously any, other names we've mentioned over the course of the podcast that we like and that if we see opportunities, we'll take a look at. But I think that at this point, just looking at the clock and how far we are into this thing, it has been a month since we recorded, so a little bit longer episode is probably warranted, but I think we make sense to call it here. Thanks everybody for tuning in. We will do better to be on a more regular schedule going forward. A couple of things. I don't know what the next episode's going to be. We'll see what the news flow tells us, but look forward to everyone's feedback and love to hear what people think on sort of the Trump trade we talked about, tax loss buying opportunities, any good names that you guys have that you think might be great entry points. And thank you very much for listening again.